And small businesses will welcome the Reserve Bank of Australia's decision to slash interest rates to a record low at this month's meeting. That's according to Treasurer Wayne Swan. The central bank joined its global counterparts in embracing record low rates, responding to soft economic data and increased calls for a lower cash rate to combat a strong dollar, encourage sustainable growth and boost consumer spending. Governor Glenn Stevens and his board opted to reduce interest rates to 2.75%, the first time the central bank has cut interest rates below 3% since it began setting monetary policy in 1990. Addressing the cut in the meeting minutes report, the RBA stated conditions in the business sector, as assessed in surveys, generally had remained below average, possibly in part because the exchange rate had remained high. Increasingly, the household sector had shown signs of responding to lower rates. The decision follows the slowest core consumer price growth in 14 years for the first quarter. Yesterday saw the release of softer than expected seasonally adjusted retail sales data for March, as credit growth also remains subdued. Mr. Stevens acknowledged the Australian dollar has remained at a historically high level over the last 18 months, hurting exporters and manufacturers, while firms remain cautious about hiring staff. Despite this, data released today highlights a trade balance surplus of 307 million Australian dollars in March, after a 111 million Australian dollars deficit in February. Unemployment remains well below other developed economies at 5.6%, and at 2.5% CPI falls well within the central bank's 2 to 3% inflation target, providing the RBA with the room necessary to make the 25 basis points cut at the May meeting. While traders are pricing in a 25% chance of a further cut at the next month's meeting, according to data compiled by Bloomberg, it's also thought the central bank could keep the cash rate on hold as it assesses economic data in the coming months. Michael Blythe of Commonwealth Bank states the one thing that would worry them is if lower rates led to an acceleration in house price growth. That would make it difficult for them to cut rates further. Attention now turns to Australian banks and other mortgage lenders to see whether they will follow Institute's NAB and the Commonwealth Bank in passing on the full 25 basis points of cuts. On the FX markets, the Australian dollar edged higher against its US counterpart on Tuesday, following comments by the RBA that economic growth was expected to be a little below trend this year, picking up gradually to be close to trend through 2014. That's all for now, but stay tuned to Dukascopy TV. I'll be back shortly with today's Commodities Corner interview. Goodbye for now.